All right, so you wanted to get up to speed on Black Box Ltd's Q2 performance,
hmm
and you handed us a whole stack of reports,
Their investor presentation,
detailed financials.
even an independent auditor's review.
Yeah, so we dove right in. Just a quick reminder, Black Box Ltd, they're a global provider of digital infrastructure solutions, specializing in data centers and network infrastructure.
We're aiming to give you the full picture, the good, the not so good, and really help you understand what it all means for Black Box's future.
Okay, so let's unpack this. The first thing that jumped out at me was their profitability. Despite a slight dip in revenue, their profits are through the roof.
It's not just a slight increase, it's a surge. Their EBITDA. That's earnings before interest, taxes, depreciation, and amortization. Shot up by 34% year over year to INR 135 crore. And their profit after tax, or PT, jumped an even more impressive 60% to INR 51 crore. You were particularly interested in their profitability in your notes, so I bet this caught your eye.
It definitely did. A 60% jump, that's huge. What's driving this surge in profitability? Is it a sign of things to come? Or just a temporary blip?
Wow. Looking at their investor presentation, it's clear their EBITDA and PAT margins have been steadily climbing, hitting record highs this quarter. This tells me they're becoming much more efficient, squeezing more profit out of every dollar of revenue. That's usually a good indicator of a healthy, well-managed company.
That makes sense. But what about the dip in revenue? Does that contradict this idea of them being well-managed?
Not necessarily. They attribute the slight revenue dip to a holdup in decision-making by clients, leading to project delays. It's possible that the current economic climate, it has businesses hesitant to make big investments, and that caution trickles down to companies like Black Box.
I can see that happening. You mentioned in our prep that the global economic situation has been a bit shaky lately. So how does this tie in with Black Box's recent funding news? They just secured a whopping INR 386 crore, right?
Right. Securing that kind of funding in this economic climate, it's a huge vote of confidence. And they're not just sitting on that cash. They've outlined a clear plan to invest it, expanding their data center build capabilities, advancing their network infrastructure solutions, driving innovation, and broadening their go-to-market strategy.
That sounds like a smart move, especially considering the explosive growth we're seeing in data center capacity. Due to cloud computing and AI, they seem to be positioning themselves to ride that wave.
Exactly. Think of it like this. They're building a speedboat while their competitors are stuck in giant tankers. This agility could be a real game changer in such a fast-paced market. But of course, we need to see how their rivals respond. And speaking of competition, we should probably talk about Black Box's revamped go-to-market strategy.
You're right. They're reorganizing to target specific industries, what they call verticals, while also offering solutions across various needs. So it's a two-pronged approach.
Exactly. On one side, they're zeroing in on verticals, like financial services, technology, healthcare, and so on. But on the other side, they're offering horizontal solutions, things like connectivity, data centers, and cybersecurity. That cut across all industries. It's like a matrix, allowing them to be nimble and responsive to emerging trends, potentially giving them a real edge.
So they're catering to both specific industry demands and capturing opportunities that span different sectors. You're right, that is a much more agile approach. But how does this all play out in the real world? I mean, so far we've only been looking at Black Box's side of the story. What about that independent perspective from the auditor's review, since you're a stickler for transparency?
Well, the good news is the auditor gave Black Box a pretty clean bill of health. They didn't find anything that suggests any material misstatements or undisclosed information. That adds a lot of credibility to their financial reporting and should be reassuring for anyone looking to invest.
That is reassuring. But I did notice the auditor flagged some delays in foreign currency transactions. Could this be a sign of trouble brewing in their global operations? Or just a minor hiccup?
It's definitely something to keep an eye on. These delays suggest there might be some inefficiencies in their global processes. It could be a minor hiccup. Or it could be a sign of something more serious. We'll need to dig a bit deeper into that.
Good point. So to recap, we've seen Black Box Ltd deliver some impressive profit growth. Despite a minor dip in revenue, they've secured significant funding and are strategically positioning themselves in a booming market. But they're not without their challenges.
That's right. The global economic climate, potential hiccups in their global operations, and fierce competition. All factors to consider.
Exactly. It's a complex picture.
But we've only just scratched the surface.
Okay.
When we come back, we'll dive deeper into their ESG initiatives, their historical financials, and their competitive landscape to get a better sense of their long-term prospects. Stay with us. Welcome back to the deep dive. Before we jumped into part two, we're unpacking Black Box Ltd's Q2 performance, focusing on their profitability, funding, and strategic moves in a competitive market. Now, let's shift gears and delve into an area you specifically highlighted in your notes. Black Box's environmental, social, and governance initiatives.
Yes, their ESG efforts really piqued my interest. It's clear they're not just paying lip service to this. They've laid out a comprehensive roadmap in their investor presentation. What struck you about their approach?
It's how they're weaving ESG into the very fabric of their business strategy. They're investing in renewable energy, reducing waste, promoting ethical sourcing practices, and fostering a culture of diversity and inclusion. They're not treating it as a separate initiative, but rather integrating it into every facet of their operations.
I noticed they've set clear targets and timelines for each of their ESG goals. They're even aiming for third-party certifications and ratings to add credibility to their claims. That's a pretty strong signal that they're serious about walking the walk.
They're not just talking the talk, that's for sure. And remember, they operate in regions with different environmental and social standards. They're not taking a one-size-fits-all approach. They're tailoring their initiatives to the specific context of each location.
That's a smart move. It shows they're thinking globally, but acting locally. This resonates with their go-to-market strategy as well, right? Understanding the specific needs and priorities of each region helps them tailor solutions that resonate with those customers.
Exactly. It's all interconnected. Their ESG commitments, their growth strategy, their customer relationships, their brand reputation. It's all part of a larger holistic approach. And you know what? Investors are increasingly taking notice of companies with strong ESG performance.
Absolutely. And customers too. More and more people want to support businesses that align with their values. It seems Black Box is riding that wave as well.
They're definitely on the right side of this trend. But ESG is just one piece of the puzzle. To fully understand their trajectory, we need to step back and look at their historical financials.
Right. Their investor presentation provides a helpful overview, going all the way back to fiscal year 2019. What stood out to you in that historical data?
Well, their growth has been phenomenal. Their revenue has more than tripled in that time, even considering a slight dip in the most recent fiscal year. And their profitability, that's where it gets really interesting. Their EBITDA margin has gone from a modest 2.5% in fiscal year 2019 to a solid 6.8% in the last fiscal year. That upward trajectory is a sign they've successfully scaled their business while improving profitability.
That's impressive, especially in an industry as competitive as theirs. But I noticed their historical financials also reveal some volatility. There have been significant swings in profit before tax, even dipping into negative territory in some earlier years.
You've got a sharp eye. This is where things get a little more complex. The question becomes, how sustainable is their current growth trajectory? Can they maintain this momentum, or are we likely to see more of those ups and downs?
It's a valid point. Past performance isn't always a guarantee of future success. A lot can change in a fast-paced industry like digital infrastructure.
Speaking of change, we can't forget about the competitive landscape. Black Box is playing in a field with some pretty big players, both established giants and agile startups. How do they stand out from the crowd?
That's the million-dollar question, isn't it? What's their secret sauce?
Well, they're emphasizing their global reach and diverse client base, giving them a broad perspective on market dynamics. They're also pushing their end-to-end capabilities, handling everything from design and build to ongoing management. It's that one-stop shop approach many companies are looking for.
They're also leveraging their expertise in cutting-edge technology, like cloud computing, AI, and the Internet of Things, that positions them to capitalize on some of the fastest-growing segments of the market.
Absolutely. But let's be realistic. Every company in the space is likely making similar claims. It's a highly competitive environment, but everyone wants a piece of the pie. So the real test is execution. Can Black Box deliver on their promises?
We'll have to wait and see how their strategy plays out in the coming quarters. But their Q2 results have definitely laid a solid foundation. Now, I know you're eager to get into those financial statements. I can practically see you itching to dive into those spreadsheets.
You know me too well. The details are where the real story lies. When we come back, we'll break down their cash flow statement, analyze their balance sheet, and take a closer look at the auditor's report. We'll search for those hidden gems and potential red flags that savvy investors need to know. Stay tuned.
Welcome back to the Deep Dive. We've covered a lot of ground with Black Box Ltd, from their impressive profit surge to their ambitious ESG goals. But now it's time to get our hands dirty and dive into the heart of their financials, their cash flow statement and balance sheet. You were particularly interested in these details, so get ready for some number crunching.
That's where the real insights lie. We can talk about strategy and big picture trends all day, but the financials, they tell the true story of a company's health. So let's start with their consolidated cash flow statement for the first half of FY25. What jumps out you?
Well, their net cash from operating activities is way up compared to last year, coming in at INR 117 crore. That suggests they're getting much better at turning their operations into uh, cold hard cash.
Exactly. They're doing a great job of managing their working capital, which means they're collecting payments from customers more efficiently and negotiating better terms with their suppliers. It's a sign of strong operational discipline, a well-oiled machine, so to speak.
That's a relief, considering their net cash from investing activities is negative. But I guess that makes sense, given their big investments in expanding those data center capabilities.
Right, they're spending money to make money,
Right.
which is usually a good sign as long as they're investing wisely. And that recent funding round, it's given them the fuel to make those investments without crippling their cash flow. It's a smart move, especially considering the demand for data centers is only going up.
So they're investing in growth, managing their debt, making sure they have enough cash on hand to keep the lights on. So far, it seems like they're walking that tightrope pretty well. But what about their overall financial stability? That's where the balance sheet comes in, right?
Absolutely. The balance sheet gives us that snapshot of their assets, liabilities, and equity. And here's what I see. Their total assets have grown significantly year over year, mainly due to those investments in property, plant, and equipment, as well as what's called right-of-use assets. That's basically the value of leased assets they use in their operations.
Hold on, could you explain right-of-use assets a little more?
Mhm.
I'm sure some listeners might not be familiar with that term.
Sure thing. Imagine you're renting an apartment. You don't own the apartment, but you have the right to use it for the duration of your lease. That right to use the apartment has value and is considered an asset for you. It's similar for companies like Black Box that lease things like buildings or equipment.
Ah, that makes sense. Thanks for clarifying.
Hmm.
So their assets are growing, but what about their liabilities?
Well, as you'd expect, their borrowings have increased, primarily due to that recent funding round. But here's the good news. Their equity has also gone up significantly, thanks to the issuance of warrants, which are basically options to buy stock in the company. This means their financial position is actually stronger than it appears at first glance.
So they're not just loading up on debt. They're balancing it out with equity. That's a much healthier approach. You mentioned earlier that you'd take a closer look at the auditor's report. Did you spot any red flags we should be aware of?
I went through both their consolidated and standalone financials with a fine-tooth comb. Apart from those delays in foreign currency transactions we talked about earlier, the auditor's report was pretty clean. That's always a good sign.
Transparency and accountability are crucial. So to sum it all up, Black Box's financial statements. They paint a picture of a company that's growing rapidly, investing strategically, and managing its finances prudently.
They've got a lot going for them. But as with any investment, there are always risks to consider. Their reliance on the North American market makes them vulnerable to economic downturns there and the global economic climate. It can be unpredictable, to say the least.
Right, and hitting those ambitious growth targets, that'll be a challenge, especially in such a competitive market. New technologies are constantly emerging, and customer demands are always evolving. They'll need to stay agile and adapt quickly to stay ahead of the curve.
And we can't forget about those pesky geopolitical events
Yeah.
and regulatory changes. Those can throw a wrench into even the best laid plans.
So while Black Box Ltd seems like a company with a bright future, it's important for anyone considering an investment to do their due diligence and weigh the potential rewards against the risks.
Always. But I think we've given you a pretty solid foundation for understanding their business, their financials, and the forces at play in their industry. Now it's up to you to decide what you make of it all.
That's the beauty of the deep dive. We arm you with the knowledge, but ultimately you're the captain of your own investment ship.
Exactly. We hope this deep dive has been insightful and given you some valuable food for thought. Until next time, keep exploring, keep learning, and keep diving deep.